All investment instruments come with some form of risk. So, what are the risks with ETFs? I'm Mark Lowdy, and this is the third episode in our series on exchange-traded funds. ETFs run the risk of tracking error. Now, tracking error happens when the exchange-traded fund doesn't mimic exactly the movement of the underlying index. And this happens in cash-based ETFs for brokerage fees, for example, which are deducted, or withholding tax or administrative fees, which eat into the value of the ETF and thereby reduces the value of your units. Second is currency fluctuations. If you buy an ETF which is traded in a currency other than your home currency, your gains and losses on the ETF itself are eroded or amplified by these currency fluctuations. There are also some risks associated with the type of ETF that you buy into. There are two types. First, there are cash-based ETFs, which give investors a direct replication of the index. In other words, the fund actually buys the securities in the underlying index, either all of the stocks in the same proportion or a representative sample. Second, new generation or synthetic ETFs. Here the fund manager tracks the underlying index using swaps and other financial instruments, or the fund manager buys derivatives which help to track the index. The fund is not likely to own many of the securities in the underlying index, if any at all. So counterparty risk applies to synthetic ETFs, where the fund manager goes into a counterparty arrangement to provide you with the index exposure. Collateral risk is again specific to synthetic ETFs. Remember, the manager of a synthetic ETF uses those swaps that I talked about, those derivatives, to provide you with exposure to the ETF. So those instruments are backed by collateral. If the fund manager needs to draw on that collateral, but the value of that collateral has fallen, clearly the ETF will be impacted substantially. You can find out more about these risks through the SGX website. Click on the links nearby the screen to get started by opening a CDP account, finding a broker, or signing up for courses and seminars through the SGX Academy.